Sand Hill Road and the venture community is going to run out of capital at a certain point, and we need to have the companies far enough along so that other forms of capital will come in and help us build them.
And where do you see those sort of later stage sources of capital? Are they as excited about this as the Sand Hill Road community seems to be?
Well, they might have been until last week or the week before.
Did something happen?
Well, for those of you that will watch this later, the company, and I think more representatively, the world is in a serious financial crisis, and it's a credit crisis. And most of the monies that are used to build out the project bases of these companies and many of the investors that would participate in the late clean tech rounds are also the same kind of investors that are private equity firms, hedge funds, investment banks, some of the people that are in significant financial straits today. So I think it's unclear on a going forward basis how much, if any, pullback there will be. I suspect there will be some. Like most things, nothing's as bad as it is when you hear the worst news, and it's not as great as it was when you heard the best news.
Mm-hmm. So do you take any special, and I don't, if I don't mean to say on a specific company to share anything proprietary, but as you look at your portfolio, are you doing anything to respond to the current conditions that maybe say extend the runway for the venture money that they do have?
Yeah, I think that's a really good point. I mean, whether you're a single person, a small family, a small business, venture-backed startup, or a large corporation, there's a giant pullback sound you hear today. I was speaking with a former CEO of a large automotive company who said, people with 700 credit score, which is a high credit score, there's a 50% chance you won't get financing if you try to go buy a car today. That's a phenomenal thing to say, that the credit is just not available in a whole bunch of different dimensions. And so what it tells us as basically managers of about 100 startup portfolio is that it's incumbent upon us to reach out to our CEOs and tell them, the cost of capital is changing. We need to be thoughtful about what resources we're adding. We need to be thoughtful about what equipment we're buying. And we need to make sure we increase the likelihood with as much cash as possible of hitting our milestones. I don't think we're about to see something that we saw in part of 2002 where more or less the startup market just dried up. Mm-hmm. That's the only time in my career, in 11 years in the venture business, where I've seen actually good companies die. Mm-hmm. And that was a really difficult time because, capital was just not available in any form. I think it's going to be tougher for good companies, but I think good companies are still going to get financed.